Live from the chicken wing capital of the world, Buffalo, New York. You're listening to the Childcare Bridge Podcast, your source for the best tips, tools, and tactics on how to market and grow your childcare center, ensuring total domination. Total domination. This is the Childcare Bridge, and this is your host, Michael Tasner.
Hey there, and welcome to episode 008 of the Child Care Bridge. Today's topic is a continuation of the different tactics and strategies and activities that you need to deploy before the year is up. Now, the whole goal and the whole objective is so that you walk into the new year on fire. Like you're ready to take the year by storm. You're not behind the eight ball. You have all your ducks in a row, and you've already gotten momentum. As a reminder, that time between kind of Thanksgiving and the new year, it tends to be filled with all things holidays and celebrations and a lot of time off and things like that. And I'm not saying I want you to take no time off. But what I'm saying is that from a productivity standpoint, I want you to get a jump so that that week between like Christmas and New Year's, for example, which tends to be one of the slowest weeks of the year, almost everybody takes it off. And if they don't take it off, they work a very light shift. So whether your center is open or not, obviously could also be dependent on how much you're working. But what I'm looking for you to do is to complete these actions so that, again, you're walking into the new year with things already done, some momentum already building, so you're not behind the eight ball. In last week's episode, I talked about one of the 4 M's that make up a no-joke childcare center, and that M was marketing. And we talked about doing a reactivation campaign, cleaning up your leads, for example. Today's focus is going to be on the second M, which is everyone's favorite topic of money. Now, this M can take a lot of different kind of angles and roads, and it's up and down and kind of a kind of squiggly process, like it's never just a straight graph heading up. But there are a couple of things that you can do to strategically position things really, really well before the new year. So the first thing that I want you to do, and this is not financial advice, so that's my disclaimer. I'm not a certified public accountant, for example, not an attorney, so don't take this as financial advice. However, take it as things that you can look into, things you can ask your CPA about, because I've been there and I've done that, and this is a topic that I have heavily researched, and I'm on the road of becoming right below a CPA called an EA or an enrolled agent. So it's definitely a subject that I'm very, very knowledgeable on, but I have to give you that disclaimer that it's not financial advice and that everyone's situation is a little bit different. So I'm recording this in October, so you still have some time to start on and get this first piece organized. But it's often one of those that is too late by the time you start to look at it. And that is looking at what you can do to legally pay the least amount of taxes as possible. So this is something that should be an ongoing strategy for you. This is something that you should be looking at during the course of the year. You should be having quarterly reviews with your CPA. And if your CPA isn't offering this type of stuff, it's time to look for a new CPA. But October still gives you a little bit of time to get some of these things done. And when I say legally pay the least, what I'm looking for you to do is to challenge your CPA and say, what are some of the deductions that we're missing? What are some of the deductions that I haven't looked at that I should? What are some of the deductions that some of your other clients are taking that I'm not taking? And I'm going to give you a few that you want to ask about, but the chances are pretty high that there are a few things that you could be essentially executing to start to minimize your taxes. And all of this stuff is above board. I'm not giving you any strategies that are illegal by any means. It's all legal stuff. The tax code is written to favor business owners. It's not written to favor people that are employees. It's written to favor business owners. So one of the most overlooked ones is paying your kids to be in your business. And that depends on whatever kind of work they're doing. But if you think about this one, for example, if you have younger kids, you should be paying your kids and doing photo shoots and videos and then leveraging them within your marketing and reimbursing them for that time, for that model shoot, that video shoot, for example, of those assets that you're going to use in your marketing and your advertising. Now, again, without getting so granular on all of this, you're able to legally pay each of your kids a fair amount of money during the course of the year. Now, if they're 1 year old, for example, you could definitely use them in some advertisements and pay a reasonable amount of money to reimburse for that. But it's going to be tough to make a case that a 1 year old is doing bookkeeping or running your social media or any different thing like that. So you have to make sure that this is all legitimate. Your kids are actively either working in the business, they're working part-time, they're helping clean, maybe they're helping with some of the after-school care, they're coming in on weekends to organize the classrooms a little bit, or again, you're leveraging them within your marketing. But you're able to then shift $12,000 per child per year, tax-free to them. So if you have 2 kids, for example, and they're working in your business and you're tracking the hours and all of that stuff, you don't just hand them the $12,000. You're able to then redirect that $12,000 per child, and then they are then able to use that money to pay for different things that are benefiting them. So they can be paying for other activities, things to school, clothing, that kind of stuff. So you don't just give it to them and put it back into your account. That's the opposite of what you're doing here. You're hiring them for legitimate things to help with your center or your advertising, and then you're paying them up to that $12,000 per year. Now, it might sound a little complicated, but it really isn't. It's really not that complicated. And depending on how you do it, it traditionally is going to then be tax-free money for your kids. That's the first one. The second one is something called Augusta. And the Augusta rule allows you to rent out your house to your business for up to 14 days per year, completely tax-free. So for example, if you're having a holiday party, if you're having quarterly retreats at your house, you can legally rent your house out to your business for up to 14 days per year tax-free. Now, depending on the size of your house and how many people are going to be at the event, there's a lot of parameters that go into it, but let's just use some simple math and say you rent your house out to your business for $1,000 a day for different gatherings, events. Maybe you have the holiday party, for example, with all the different families. Then you have another one for your staff. Like there's a lot of different things that you can do. And if it's $1,000 during the course of the year times 14, you now have a $14,000 tax-free to you write-off. Again, you've got to have the proper paper, the proper documentation, but I want you to make sure that you have all of those ducks in a row, but those are 2. So paying your kids and then deploying the Augusta rule. The other thing that I highly encourage you to do is to go through and audit all of your personal credit cards. I do this a couple of times a year to make sure that you didn't accidentally use your personal credit card for things that are business expenses. Did you use your business card a couple of times for lunch or dinner when you took your staff out? Are there times when you went to Office Max or Office Depot or Best Buy and you used your personal credit card instead of a business credit card to purchase supplies? Typically, there are a few $1,000s during the course of the year of extra things that wound up on a personal credit card that you don't end up writing off. All that stuff adds up. Now, depending on your tax rate, this could be a 20 to 30% savings for every $1,000 that you're finding. of legitimate business write-offs that you forgot. Well, I didn't have my Amex card, or they didn't take Amex, so I had to use my personal Visa card, for example. And, I completely forgot about that. I even, at times, will make this mistake. Now, for me, it's typically very, very few and far in between. But if you're not completely, like, dialed in on all things accounting and financials, you might have thousands and thousands of dollars on personal credit cards. So the first piece of the money equation before the year is up is to look at what you can do to mitigate and legally pay the smallest amount of taxes. So challenge your CPA on some of the extra deductions. If you're doing R&D stuff, you can look into the R&D tax credit, for example. So if there's new things you're doing with curriculum, that could qualify for the R&D tax credit. If you have a home office in addition to your regular office, you could look at writing off part of your house for that home office and part of the utilities. If you're leveraging your vehicle for work purposes, maybe you have to take some of the kids or pick kids up in your work van, for example, or your personal van that gets used part of the time for work, you can write off a portion of that. So I want you to look at what are some of the different things that you can be legally writing off to minimize your taxes. Because that is one of the biggest things that I have seen really hurting centers, is that they go through the year, great, year is up, and then their CPA starts getting all their tax stuff together, and they say, well, looks like you're going to owe $64,000. So what do you mean? How would I owe $64,000? If you have no idea what you're going to owe as the year is progressing, that's issue number one, which we'll talk about in a second. But it's not necessarily too late. However, you can't magically go back and write a $12,000 check to each of your kids, for example. And you can definitely write things off that were accrued that you paid personally, but it's much better to be tracking all of this stuff during the course of the year and having it entered in and all that stuff organized before the year is up. So that's the first one. I want you to legally pay the least amount of taxes possible. That's money in the bank for you that you can look at taking for profit distributions. You can roll it into the business to have an emergency fund, whatever you would like to do with that. That's the first thing. The second thing I want you to do is to just do a high-level meeting with your CPA that's just having them explaining some of the different things to you, going through and putting percentages next to your different expenses. So, simple math. So don't be alarmed if your revenue isn't at the number that I'm going to use. I'm just going to use it for some simple math. Let's say you're doing $100,000 a month, all 12 months out of the year. Okay? I want you to then have things down into percentages. So what is your labor percentage? What is your lease or your building payment? What are the owner benefits? So what salary are you taking, and are there some things that are benefiting you as the owner? Your food costs. So go through and start to bucket things out, and I want you to start to put percentages so you're then able to start to track that. The reason I want you to start to have some percentages is that in a future episode, not for today, we're going to talk about having you deploying a methodology called Profit First. It's one of my favorite ways to track, but also to make sure that you are benefiting first before everybody else. But in order to do it, in order to execute Profit First, you've got to have your numbers dialed in, but more so the percentages. Is it 30% going to labor, for example, and 10% food, and 50% is going to your lease? What are the buckets that are getting allocated? And then how did those kind of jump up and down during the course of the year? Now, if your CPA works with other childcare centers, they can start to benchmark and give you some insights to say, yeah, you're way above here, you're way behind here. And I can give you some benchmark numbers as well as to what you want to strive for. But I'm looking for you just to have that high-level meeting to better understand the books, better understand not even where the money is going, but I want you to start to look at the percentages. Well, geez, right off the top, 30% of my money is going to the lease payment. I thought it was closer to 15%. And you might be surprised on some of these metrics. And when you have these percentages, I want you to start to put together a rough budget for next year. But I'm aiming for you to start to put the budget together more so in percentages. So you want your labor to be, currently it's 30%, you want to aim to get that to 25%. Okay, great. So there's certain levers that you're going to have to pull for that, and that's going to be maximizing your enrollment and maximizing the ratios, because you're not going to be able to execute a salary reduction, because that's just not going to fly in this kind of economy. Your percentages are here and here. And what do you want to look at for next year? What are some of those growth plans that you're going to start to go after? Do you want to see your tuition go up? Do you want to see that 100,000 number go to 150,000? And how are you going to do that? Well, you have 50 empty slots at $1,000 a month. Or you can put an addition on the building. You want to acquire another center. What are your goals for next year from a financial standpoint? Not just all of your goals across the boards, but I'm really looking for you in this particular area of money to get more clear on the money side of things. What are you envisioning? What do you want to see happen for next year? So the first thing that you've done is you've met with your CPA and you've challenged him or her about your taxes. Where are we looking for the year? And can we start to deduct these things? Can you tell me more about paying my kids? Can we look at the Augusta rule? We still have some time left to have some events at the house, for example. So you want to have that so that all of a sudden you might have had $50,000 in a tax account, but you start to realize, well, geez, you are able to mitigate that 50 down to 25,000. So now you have 25K that's sitting in an account that you can do whatever you would like with it. Whether that gets reinvested in growth in the business, you use it as a down payment on another center, you take it as a one-time distribution, and you take some of it as a distribution for you. You pay off some high-interest debt. There's a lot of things that start to open up when you magically find money that you didn't necessarily have planned or budgeted for. So that's the first thing. The second thing is you've had another meeting with your CPA to really look at the numbers around percentages. What are the buckets that you have things currently going into? And then asking your CPA, what are some of the buckets that we're missing? So let's say you have your labor bucket, you have a food bucket, you have a rent bucket, and a miscellaneous. Well, what about owner benefit and taxes if you're not putting any money aside for taxes? You're going to start to catch a couple of those things during that meeting. Once you have that done, you're going to then start to put some notes together for financially, what do you want things to look like next year? What are some of those things that you really want to accomplish financially next year? You want to see your salary double. You want your enrollment to go up. You want to see your tuition numbers go up by 10%. What are all those top level things so that, again, you're walking into the year with a plan, not saying, well, maybe we're going to raise tuition this year. Maybe we should have done X, Y, Z and mitigating our taxes. Well, we'll look at that next year. All that money is then out the window when you could have already had that stuff taken care of. You got to get all that stuff dialed in. The final piece is for you to look at, are there any levers that you can pull to generate some extra income? Now, that could mean that you're generating the income this year. That can mean that you're going to start to deploy these levers in January. But I want you to really look at that. And I want you to spend a couple hours, spend an afternoon outside of your center. What are some of the levers that you can pull to grow your revenue that were really not going to cost you much more? Raising your tuition is the fastest and easiest one. It's one of my, it still is our top rated episode currently. You could do a reactivation campaign that we talked about in the last episode to drive some more enrollments quickly. So if you can maximize those ratios currently, that's money that's sitting there ready to go. Could you look at after school care? Do you want to look at after school care? Could you open one day a week or on a weekend? Do you want to do it once a month, for example? Do you want to rent out your space for parties? There's a lot of different things that you can look at, but I want you to brainstorm and look at one of them. You don't have to execute all of them. What is the one thing you're either going to execute this year or January of next year so that you are already minimizing your taxes, you're getting more in tune with your numbers, and then you're growing revenue without having to add much, if any, additional expense. That is how, from a money standpoint, you get yourself on fire, ready to rock and roll for the new year. You start to get these things done ahead of time. Now, all of this together really wraps up to, I need you to really know your numbers. I need you to be getting meetings booked quarterly with your CPA so that you're having tax strategy calls, that you're not just having a report once a month that says this is how much money you made or lost. I need you to be having those meetings on a regular basis so that you really start to better understand the books, better understand the numbers. Some of this stuff might seem a little complicated, and I promise you that as you start to deploy the different strategies, it gets less complicated. You don't necessarily have to be completely learning about credits and debits and how every single line in a balance sheet looks, or what are all the different lines on a P&L statement. You don't have to be that dialed in, but at least at a high level, you start to better understand your percentages, money in the door, out the door, how you could be keeping more of your money, how you could be maximizing things. Those are the kind of the meetings that I really want you to start scheduling ahead of time so that you're not behind the 8 ball. Make sure you tune in for the continuation next week, as well as we're going to keep going through the strategies to get yourself ready for the new year. Get yourself locked and loaded, on fire for the new year so that you're ahead of every other center. Thank you, as always, for listening. Have a wonderful rest of your day. Good morning, good afternoon, and good night.